Whenever you want to trade, let's say you are using support and resistance on as your strategy rather. That support and resistance strategy can literally work using one time frame. But we have been conditioned to what they call top-down analysis, meaning that you have to go on one time frame, look at what is happening there, and go to the medium time frame, go to the lower time frame, and stuff like that. And to be honest with you, that kind of movement when it comes to trading sometimes always creates a kind of analysis paralysis, and that is where majority of us get it wrong, or probably that is where majority of us start becoming confused whenever we open our chart to analyze or to look for a trading opportunity. And I am grateful that last year 2025 I was able to decode that based on my strategy, and that is what I want to explain to you guys as well. Let's say you are using support and resistance strategy just like I have said. If you had mastered your support and resistance strategy very well, you will realize that on every time frame, be it a daily time frame, 4-hour time frame, or even 1 minute time frame, there is always support, there is always resistance. So, meaning that sometimes you really do not need to go on multiple time frame if you really know what you are doing. But the major reason why I would say it is good for one to trade using multi-time frame analysis is because of stop loss. And this is what those big boys do not explain to majority of us. If you go to a daily time frame, let's say you want to buy from a support and you've marked out the support, the difference between daily time frame support and let's say 1 minute time frame support is, if you are going to take trade on a daily time frame support, your pip ratio, which is your pip stop loss, is going to be wide. You understand? It's going to be wide as compared to trading on a lower time frame like 1 minute or 15 minutes, where you find your setup of support and resistance. You want to buy from a support on a 15 minutes time frame, believe me, your stop loss is going to be very tiny. So this is what I want to say in this video. Your strategy can literally work on any time frame. If you know you are trading support and resistance, do not overcomplicate things. You can just open your chart, let's say on a 15 minutes time frame, read the market structure very well and look for your entry criteria on that time frame. They are not going to tell you this, but that is just the truth. Sometimes using multi-time frame analysis creates analysis paralysis. If you are going to hit stop loss, believe me, even if you are trading on a weekly time frame, you are still going to hit stop loss. I don't want you guys to get me wrong. I am not saying multi-time frame analysis is wrong. I am not condemning those that are using that approach, because even myself, I use that approach. In the way I trade now, I really do not need too much time frame before I decide on what to do. Maximum, I only use 2 time frame. And the reason why sometimes I use 2 time frame, just like I have said, is because of stop loss. Because I am a kind of intraday trader. So majority of my positions, I like to close it probably at the end of every day. So what I do is every day, whenever I open my chart, I try to get, let's say, an instrument which I want to trade. It can be currency pair, although as at now I do trade more of currency pair. So let me use Euro USD for example. So let's say I come on my chart today, I open Euro USD. So as an intraday trader, what I do is I go to probably 4-hour time frame. So on the 4-hour time frame, that is where I am going to read my structures to understand the directional bias for that day. Am I going to look for opportunity to short, or am I going to look for opportunity to do what? To buy on my let's say bias time frame. So if I had analyzed that on the 4-hour time frame, for instance, and if at the moment 4-hour time frame is presenting to me my entry strategy, I am going to take my trade from that 4-hour time frame. But if 4-hour time frame is not presenting to me my entry setup or my entry criteria, I already know, let's say for instance, I already know that my directional bias on Euro USD for that day is to go short based on what I have analyzed on 4-hour time frame. After analysis, the next thing is to look for entry. Now 4-hour time frame where I had analyzed the chart is not giving me my entry criteria. I will now scale to probably 15 minutes time frame straight, because I already know that my directional bias is to look for opportunity to short. So on the 15 minutes time frame, I'll be looking for opportunity to go short based on what I have analyzed on the 4-hour time frame. And that's the reason why I'm saying to you that I'm not condemning multi-time frame analysis, but I just want you guys to know that sometimes you really do not need multi-time frame analysis before you can get your trade entry. You just have to master your strategy very well, because those strategy or your reason for entry is still visible on every time frame. And that's the reason why I use support and resistance as an example earlier on. You can literally find support and resistance on a monthly time frame, but it is going to be hard to take trade on a monthly time frame because we are going to have less opportunity on the monthly time frame. So you have to understand time frame and your strategy very well. And with that, believe me, you don't have any reason to jump from one time frame to another, to another, to another. All those things creates confusion. So maximum, you only need 2 time frame. One to get your directional bias, and the other one should be to scale down and look for your entry. If you find value in this video, like and comment your opinion. If you are the type that love doing multi-time frame analysis, let me know. If you are also the type that probably take your trade on one time frame, just like I have explained, let me know in the comment section, and I will see you in my next video. Peace out.